Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is the week ahead. Today, we're going to talk about what's in store for this week. It's a big week on the financial markets. The United States Federal Reserve is making their latest interest rate announcement. That one's coming at us Wednesday. We've also got a couple of trade ideas. We've got a straight-up loser in the U.S. dollar, Canadian dollar, and I want to highlight the importance of this loser, why the level didn't work, and what exactly you can do to prevent losses like this in the future. There was one very clear-cut reason why the dollar CAD support level did not work, and number one is there was too many sellers there, but number two, why were there sellers there? Key economic event. You always got to know your economic calendar. You've got to be aware of what's happening in the live market at all times. And remember, no matter how good a trade idea is, no matter how solid a trade idea is, if in fact there's more sellers than buyers, your buy's dead. If there's more buyers than sellers, your sell's dead. And that's just sort of the way that it works. So I want to say welcome to everybody back in the room. I think it's a fantastic day to be a trader. Monday, relatively slow. We're going to talk about the U.S. Treasuries auctions. We're also going to recap what's happened. We had a huge announcement in the AI space that just came across the board in about the last hour and a half, last 2 hours. New legislation and executive order from the Trump administration is set to be really launch the era of AI protectionism, and I don't know, protectionism, excuse me. That's going to be an interesting development, one that we're going to be watching for probably years to come. We've also got some fresh news out of Venezuela, and the news is nothing's happened yet. We'll check our poly market odds on airstrikes there in Venezuela, and also look at our WTI crude oil markets, which is right around $59. We'll preview this week's streams, what you can expect out of the room, and also we'll talk a little bit about holiday trade. We're getting into the time of the year when the markets are slow way down. They slow way down, and the biggest thing you need to remember is when they slow down, there's not as much depth, there's not as much liquidity, and you can run into real trouble trying to trade big leverage. This week is what I would call probably our last pure trading week of the year. We might get some action next week, but right now I am seeing a holiday trade really, really indicative across the financial markets. A little bit of selling creeping into the United States equities markets, but I have to be honest with you, very, very flat markets. WTI crude's on the move, big pullback in natural gas, though we're still looking to the bullish end of that market. And then you've also got gold and silver sort of flat, and that's been rare for gold and silver lately. So I want to say welcome back, everybody. It's good to always be back here on a Monday. Riaz, good to see you, Riaz. Team Marina, hey, Shane, how was your weekend? My weekend was fantastic. Congratulations to my University of Montana Grizzlies for mopping up the floor with the South Dakota State Jackrabbits in the second round of the FCS playoffs. Big game, Washington Grizzlies Stadium. The weather held off. It was pretty good. It was really sort of sloppy going into the stadium, but really a great environment. Not as many people usually is there for a playoff game, but the Montana had real tough weather all around the state, and a lot of folks that usually come to those games couldn't make it because of the road conditions. So everybody that was there, you know who you are. I know there's a few folks watching out there that did go to the game. Great game. Can't wait for this weekend's game. South Dakota whipped South Dakota State last week. Next one's up South Dakota. So it's a lot of fun this time of year. Holiday season usually means football, at least American football here in the United States. A lot going on on that front. So my weekend was very good, T. Dryder, good to see you, Dryder. Welcome. I am Blue. Hi, Shane. Good to see you again. Good to see you. I am Blue. I want to say a big shout out to some of the interviews. I actually got a chance to meet a few of you out there this last week and talk trade and go through some of your issues, some of your trades, some of your expectations, and how exactly you want to build for the future. You know who you are out there, but it was absolutely fantastic and wonderful talking with you guys. Great traders out there. I'm always surprised at really the astute nature of some of the traders on the stream. And remember, this is for everybody, beginners all the way up to advanced traders. Ask any question you'd like. I'll be sure to answer it before we sign off today. So good to see you. Let's see over in the How to Trade community. Good to see you. Gordon Williams. Always a pleasure. Gordon Tuku. Bobby Bob. Hi, Shane. Hi, Bobby. How you doing? I think you're probably doing pretty well if you're on the probably the short side of WTI crude today. Interesting. We had a key level come into play there. I'll point that out in just a second. Lead, always a pleasure. Lead and Andrea Garwell. Good to see you, Andrea. I'm confident everybody's doing well, ready to get into holiday trade. This is always sort of a stagnant, sluggish time of year. It really is. So I think this is a great time to evaluate your performance, game plan for 2026, and also if you get some opportunities, maybe pick off a few good trades from now until December 31st. I think we're in for an interesting week. I really do. All right, let's get right into it. Okay, let's start with some trade updates here. Let's go ahead. We had a trade update out earlier today. I put a trade idea out on the Australian dollar, US dollar. Really an interesting idea because Essentially, what we're going to look to do is scalp to the short right in front of 67.07, which is the yearly high. But I did want to point out sort of the bullish nature of this market. We had a buy signal on the 920 EMA crossover that developed back on the 1st of December, about, 7 days ago. And you can see it's been just a really nice run-up, really a beautiful swing trade. Your bid would have been somewhere right around your closing value was about 65.43, so you've got just about 100 pips out of that move. We're very, very close to it. Actually, you did top out just above 100 pips. That's a nice 5-day move, 4-day move here for the Australian dollar. Now, the big thing you have to remember for the Aussie is that you've got interest rate expectations and you've got the RBA meeting later on this evening here in the United States. It's going to be early in the Asia-Pacific session, the Australian Open shortly after that. So beware, be ready. If you are trading the Australian dollar, US dollar today, it's going to be key. RBA is going to get involved. They're going to issue their latest interest rate decision. We're looking for about a 3.6 prime rate, and that's supposedly unchanged. So we're not expecting much of anything out of the RBA. I do believe that potentially we could get a move. I just don't think it's going to be now. I think they're going to hold pat. This is a very hawkish RBA all of a sudden, very, very concerned about inflation, much like the Bank of Japan's concerned about inflation. So a lot going on here. Not everybody's as dovish as the United States is. I'm going to go ahead and I'll go through all the interest rate expectations in our lineup for this week, but definitely a big time event coming your way. If you are trading the Aussie, be ready for it. And that RBA is going to get involved probably in the next 10 hours, somewhere in there, 11 hours, 12 hours. Excuse me. You also have to excuse the voice. Did a little bit yelling on Saturday out in the cold, so it's always a little bit, this time of year, it's always a little bit deeper than usual. Remember, if you want to trade any of these ideas or any of these levels that you see or any of the strategies that you see, check out Switch Markets. Bring your ambition into focus. Thousands of global markets, fast and easy, deposits and withdrawals, zero commission accounts, advanced free trading tools, 24/7 human customer support. You just go right down to that right there. Click on that speech bubble, and you've got an online chat live and ready to rock and roll round the clock. So that's always a nice feature from a broker. I know a lot of them do not have that. You go down, these are the resources we've been highlighting lately. Free trading journal template. If you're interested in that, go and check that out. We also have just a lot of tools here, a lot of value-added stuff that you can get involved with pretty much whenever you want. So we're making videos all the time based on the service suite over at Switch Markets. Go ahead and check us out at Switch Markets on YouTube, and you'll get all the latest. We put out a video on the S&P 500 last Thursday. So if you're interested in that, go ahead and check that video out. Shows you exactly how to trade the S&P 500 on your futures, CFDs. Always a big deal, S&P 500. A lot of folks trade it. Let's see. Ahmed, good to see Ahmed. Let's see. Valedictory, it's great to see how the market will react this week. I tell you what, Valen, you're going to have a lot of interest rate talk, a lot of scuttlebutt, a lot of folks that are very, very interested in what exactly is going to happen Wednesday afternoon. We're going to have FOMC Live for you. That's the big key event this week, so you're definitely going to want to stay tuned for that. Okay, we've got a teachable moment here. I never run from losers. I really don't. I don't like to lose. Losing bothers me, but this trade was a flat-out loser. We didn't get any support at all from our level, 139.14 level. Didn't get any out of that at all. 139.25 was a pretty good trade on the buy side, but this area right in here did not do us very good at all, and I'm very disappointed by that. But at the end of the day, there's a very good reason why this trade failed, and I want to highlight that, and then we'll dive into our other trade ideas, and I will take any markets you want to look at, and I'll be sure to draw those up for you as well. U.S. dollar, Canadian dollar. We had a long-term monthly support zone right around that 139 handle. Our entry was somewhere right up around 139.14-ish. Probably wasn't aggressive enough. Needed to be a little bit higher, but we were looking to bid this market from 139.14. And for those of you that are new, bid means buy. Well, we stepped up to the plate. We bought 139.14s and went along for the ride. And as you can see, we got absolutely smashed. This trade was an absolute loser. Let's go to a daily chart. I'll show you what you mean. Boom, there's your big crash on the 5th of December. Interesting stuff, isn't it? Let's take this down even further to a 30-minute chart. What happened? This was our level. The blue line was our entry point. What happened? A couple of observations. Number one, volume spiked. All right, volume spiked, and they were all sellers. That was not a good scenario. Let's take this down to a 1-minute chart and show you exactly what happened in the micro. See if I can find it here. Interesting stuff right there. That was sort of your open. Yesterday's electronic open sort of knocked a lot of folks out of that trade, didn't it? Knocked a lot of shorts out. Pretty interesting stuff, though, right here was our issue. There's our entry point, 139.14. Very, very important that we recognize that order flow and supply and demand and all that jazz impacts trading in a big, big way. And what you had right there, what happened? My charts are in Mountain Time. What happened there? 6:30 a.m. Friday, what happened? 8:30 a.m. Eastern, what happened? PCE and core PCE. Now, this is one of the reasons why holiday trading, when you're trading during periods where there isn't as much volume in the market, you can really get hurt. Support and resistance levels don't work as well. Technical indicators do not work as well. The reason why is there's not enough volume or market depth to really support both sides of the market. Now, right here, dollar CAD just absolutely steamrolls. Why? Look at the huge amount of volume here. Now, this is a Forex chart. Okay, so a Forex chart is going to, it's a Forex market chart, which is an OTC market. That volume is going to be tick volume. That's not going to necessarily be the number of lots traded. Brokers, liquidity providers, they don't really like to release that kind of data. You would have to go to a futures exchange to find out exactly what the volume looked like. But here's what we do know. There was a tremendous amount of participation right here. We do know that. Now, you'll see exactly how low the rest of your volume was in the lead up in the hours really to this. I mean, take a look at it. It's dead. The market is absolutely dead. And then what happens? Our news event drops. The absolute volume increases exponentially over previous volume. And what happens? Directional move. There's your big plunge. There's your compression right around our key level, and then we just sell off from there. So it's very important that when you do trade these things, you have a stop loss in mind or an area where you have to get out at. We try to put that out there with our key levels. Typically, I build those on a 1-to-1. So if we're looking for 50 pips profit, we're going to get out at no more than 50 pips loss. This trade was an absolute loser. Now, I talked to a trader the other day, an astute trader, someone that's been in the market a long time and has a lot of experience. And the question for me was, do I need a stop loss? And I said, well, the strategy is relatively straightforward to not have a stop loss. A lot of folks just let these trades run, and let's say you were buying right here, and then you'd buy a little more here and buy a little more down here, and what happens to your entry point is that it comes down and is more reasonable as opposed to where the market is. Now, I don't necessarily, a lot of folks say that's the number one cardinal sin in trading and to never do it. It's called dollar cost averaging. And that's when we buy something at 139.15. And if it moves against us, well, if we liked it at 139.15, we've got to love it at 138.85 or something like that. And we sort of design our position going against the trend. I highly advise against doing that. And the reason why is eventually you will get caught up in a market that does not come back to you. Now, there's a lot of signal providers out there. There's a lot of folks, a lot of talking heads on YouTube that basically take something as pure as our 920 crossover. They take strategies like this, and what they do is they say, okay, we're going to buy here, and then if in fact this goes against them, they keep buying in so that break-even point moves down. So the idea being the market just has to come back a little bit to make it a positive trade theoretically. I can't stress to you how dangerous that is. There's an old saying, I believe it was from Paul Tudor Jones, and the saying goes like this: a loser's a loser's a loser. And what he's doing is he's talking about losing trades. A losing trade's a losing trade's a losing trade, meaning a loser is a loser. And sooner or later, if you dollar cost average into these positions, you're going to run into a loser. Now, a losing trade, given that strategy, is one that just keeps trending against you. And if it keeps trending against you, you're in big, big trouble because the market's not going to turn in your favor. And if it never turns in your favor, you're going to get wiped out. So you're going to go from maybe taking a 50 pip loss on that dollar CAD trade to essentially still buying into this thing. And I can't advise that. I said, well, we got hit here. Is there a rebound in here? Yeah, there's bidders here. We went right down to our monthly golden zone. My next entry point, my bid would probably be right down around 137.70, somewhere in there. We went right down to 137.99, so there were bidders at 138. So I'd say, well, I mean, if you're keeping buying this market and you have the money to do it, you know, at this point, you're kind of hoping it comes back to 139. You really don't know that it will for a fact. So if you do take that kind of approach to the markets, understand you're doing a couple of things. Number one, you're tying up your capital for longer periods of time. And number two, you're really opening yourself up to a major catastrophic loss if the market never comes back. Now, the reason why I bring this up is I've heard it from a couple of traders. I had a nice conference with an astute trader that said, okay, I buy it when it's going against me. And I said, okay, there's nothing wrong with that, but you've got to know when to pull the plug. So let's say you said, okay, I have the capital here. We bought some here. We bought some here. Maybe we bought some down here. I don't have a problem with it as long as you know that you've got to pull the plug somewhere and it doesn't burn all your money. So if you can approach the markets with your risk management in check and you're still making smart moves and you have enough money to do it, I would never tell anybody not to do that. You need to know when you have to get out. And remember, a stop loss is the point in the market where you know you're wrong and you have to get out. If you operate without stop losses, you're opening yourself up for a catastrophe. Now, there's a lot of traders in this world that have made millions and millions of dollars operating without stop losses. They have. A lot of the old pit traders, they didn't have stops in their minds. They would go into the pit and they were looking to either buy or sell discounts. They'd say, okay, this thing's overvalued. I'm going to sell it and we're going to wait. Okay, this thing's underpriced. I'm going to go ahead and I'm going to buy it and I'm going to wait. It's aggressive. I like it. And you can go a long time being profitable trading that way. But please understand me when I say this. When you're finally wrong, it's going to be destruction. You're going to blow your account out. Almost guaranteed. So if you're going to make those moves, don't risk any more than, I always say 1 to 3, I'll give you 5%. That's going to be a much more expensive trade. Don't risk any more than 10% of your account on a dollar cost averaging play. At least if you lose, you only dump 10%. You can still come back from that. What you can't come back from is 50% or 60% or 70% on one trade. The markets can stay irrational longer than you can stay solvent. Call the cliche police. That type of strategy, people have made a lot of money doing it, and they go a long time before they're wrong. But eventually, Black Monday comes around or Black Friday, and that's a wrap. That's all your money on one trade. Be very careful doing that. I would never tell anybody how to trade, and I would never tell you guys what to do. Be careful when you're doing that. Be smart. All right, let's see. Ahmed, Bitcoin got zoned between the U.S. dollar rate cut and the Great Britain pound rate hold. Maybe an increase. Yeah, we're going to look at a little bit of Bitcoin here in a minute. Team Marina, Shane, when to use the 8-13-21 versus the 5-8-13? Any advantage for using one over the other? I would lean towards the 5-8-13 on shorter time frames and a scalping mentality. That's what I would do. And the reason why is they're shorter durations, sensitive to current price action. You're going to get a lot more trades using that 5-8-13 on intraday time frames. Whereas the 8-13-21, those are longer time frames. You can still do it on an intraday basis. I prefer the 5-8-13, 8-13-21. I'm thinking swing trade. That's what I'm thinking. Something to think about there. Let me see, Ahmed, what are your thoughts for the Nikkei and the DAX? We've got a great level on the Nikkei coming up. And then the DAXI, I'll pull the DAXI as well. Okay, so that's sort of a good look at the psychology here. We've got a lot to cover, though, so let's go ahead and dive into the week ahead. Week number 50, 2025. It's already almost over. It feels like we just kicked it off last January. Nothing better than being in the trenches with you guys each and every day. I think that it's going to be an interesting week. I really do. Today, not much is happening. U.S. T-bill auctions. We're going to talk about those in just a second. Tuesday is the RBA interest rate decision and the JOLTS job openings. Don't hold me towards the JOLTS job openings numbers just yet. We've seen some major catastrophic shifts in our economic calendar. CPI was penciled in for Wednesday. They kicked that down the road to December 18th. So there's a lot of changes still going on this calendar. This would be our tentative outlook. So maybe we get the JOLTS job openings tomorrow. I just don't know for sure. Wednesday, the BOC interest rate, a hike. Well, that's not supposed to be a hike. We'll talk about that more Wednesday. BOC, that they're getting involved. EIA crude oil stocks, Fed interest rate announcements, all that's coming your way Wednesday. It's the key day of the week. We will have FOMC live for you, 2:20 p.m. Eastern time. We're going to take a look at Jay Powell and what exactly he has to say right now. We're looking at a rate cut. We'll see if that unfolds on Wednesday. Thursday, the S&P interest rate decision. We're going to recap that. Initial jobless claims. Those are the key events. So if you're trading the Swissy, beware. And then Friday's the UK GDP and Germany CPI. So EU, the Euro USD probably going to be in play for Friday, especially after the Fed acts and a lot of things are going on. So definitely want to get involved there. As far as what we're going to be streaming this week, we're live today. We're going to be live tomorrow at the same time. Wednesday is going to be our FOMC live. We're going to be on at about 12:20 my time, 2:20 p.m. Eastern, 10 minutes before the presser. We're going to be live for you. And then also we're going to be live Thursday with our switch markets. We're going to do some more tick scalping. I'm going to see if we can make 10 ticks. Last time out, we sat down and made 9 ticks, and we made it pretty easy. And I'll probably be trading futures contracts, maybe some Forex if we're active. And then Friday, we're not streaming Friday. We're not streaming any Friday for the rest of the year. So that's sort of where we're at in that position. May throw in some news briefs if anything big happens. But right now, that's going to be our streaming schedule. Same time tomorrow. FOMC live Wednesday, Thursday, switch markets, live trading webinar, tick scalping. That's going to be our schedule. Okay, so what did we have today? The news of the day is the 3-month T-bill and the 6-month T-bill. These yields came down because we're expecting a rate cut and a dovish Fed all of a sudden, and that sort of gives us sort of rise to the narrative of a weaker dollar. So the dollar is going to be getting a little bit weaker potentially. Right now, the dollar index is right around 199. We're looking for a bit of a retracement this week because we're going to get a rate cut, we believe. Surprising me. It really is surprising me. We believe we're going to get that rate cut, and then also maybe some more dovish sentiment out of the U.S. Federal Reserve. So here's our CME FedWatch Index and a good look at where our interest rate expectations are for December. What I would say is that this thing looks to me like it's pretty much locked and loaded. It's about 89.9% that you're going to get your 25 basis point rate cut. That's a big change. That's really a big change over the last 6 weeks. We didn't think we were going to get a rate cut for a while. It was about 50-50. Inflation is still extremely high. We saw the BOJ decide they were going to raise interest rates. You're going to see the Australians, the RBA, the Reserve Bank of Australia, probably hold their rates at 3.6. Probably not going to get a rate cut out of Canada. We'll talk more about that as well. And you're going to get one out of the United States. So I think that you're in an interesting position for Wednesday. We'll talk more about this tomorrow, but as of now, we are already pricing an interest rate cut for Wednesday. So for me, I'm looking at the dollar index, and you can see we've got all sorts of things here, all sorts of wave counts and things that we've been looking at. But the big picture is, where does this market stand with regards to where it's been all year? Well, we've been in a rate cut cycle, and you can see we're very, very dovish. There's no question about it. This type of analysis is relatively straightforward, relatively simple. Spike high to a spike low. There's your pullback. 13-month EMA is present right around, 155. That would be a great sell in the DXY. I would have that marked on my chart for the rest of the month. Interesting stuff. 38% up there at 101.57. This zone up here between that 100 and 101, that's a big-time resistance zone. Given the rate cuts, given the fact that Jay Powell's out at the Fed next year, given the fact that 12 FOMC members are more than likely going to be restructured in some way, I think that the dovish way to play the dollar is basically the only way to play the dollar. So I think you're going to see a weaker dollar. It's going to start Wednesday, sort of already priced in these rate cuts, beginning really right after this rally back in October. Now things have certainly changed. Definitely a long-term L formation, which is extremely, extremely bearish. It's very bearish. So when I'm looking at the dollar right now, I say, man, that's bearish. No question. Let's look at the daily. And there's your dailies. Something like that. It's just been a steady downtrend, and right back in there, 21st of November, right before Thanksgiving. That's when reality really started to set in that you were going to get a rate cut as opposed to interest rates being held static. Dollar's weak. Dollar's getting weak. It's potentially going to get a lot weaker in 2026, barring some type of external event that we just can't rationalize. Bond yields coming down. What does that mean? It means we expect an influx of new capital into the system originating at the Federal Reserve. It's that easy. Money supply gets bigger. The money's not worth as much. Yields go down because there's not much impetus to try to attract money out of the system. We're going into an interesting period, one that's potentially going to be very bullish for U.S. stocks. Economically, though, what happens to inflation? I don't see any way that inflation stays down. I really don't. I just don't see it. Okay, let's see. We got a look at Bitcoin. We want to see Bitcoin, the Nikkei, and the DAX. Let me see SGK. Good day. Good day, SGK. How are you? I'm doing very, very well. Bluefin, good morning. Bluefin up late in the UK. It's not that late yet. It's about 6:30 UK time. Good to see you, Blue. I think you went on a fishing trip last week or the week before, been doing some fishing. I'm confident you did well with a name like Bluefin. I'm sure you guys tore him up out there. I'm a ways off of fishing. It's pretty cold here in Montana. Probably no fishing for another 6 months at least, maybe 5 months. In any case, right here, there's your dollar index. Let's go ahead and take a look at a few of these markets. If you have any markets that you'd like me to look at, be sure to drop them in the live chat, and I will do my best to give us some idea of what's going on. Okay, this is going to be a quick and dirty look at the Nikkei because our analysis is already done. I was really big on this market last week, potentially reaching an area where we can really attack. And this area is going to be right down in your Fibonacci golden zone. Spike low, spike high. Let's just dial this in exactly. Well, a little bit closer than it was. Spike low, spike high, pullback zone. 50,000 is the key level. 50,000 is the key level in the Nikkei. So we're looking for a bump off of 50. If we get it, we're gonna feel pretty good. Right there, your 13-week EMA, or 13-day EMA is right around 49.98. That's just a beautiful area. 49.989 and 50,000. Plus, you've got the back end of your Fibonacci golden zone at 49.834. That is a damn fine area to bid this market, and definitely a support zone I will be watching. I like this zone because you're very highly unlikely to get a big move that rips through here. So you got an EMA there, 49.989. You've got a key level of 50,000, which has been the point of control for a long time. And you've also got the 62% Fibonacci down there at 49.834. You've got a Bollinger midpoint there at 49.815. It's unbelievable. It's unbelievable. So you're definitely going to want to be aware of that. Let me see. Bluefin, AU, you're in Australia at 5 a.m. I knew you're somewhere. I couldn't remember if it was in the UK or Australia, but wow, welcome. 5 a.m. That's bright and early. Bright and early for Australia, so welcome. That's for sure. Let's see. So essentially that's what we're looking at for the Nikkei. I really like that. I think that's really a strong level. We will definitely be looking at that one as we move forward. We had a question about the DAX. Let's take a look at the German DAX. Now, full disclosure, I am not an expert in trading the DAX. I've never made a DAX trade. All I've got is my technicals that I look at. And some of your fundamentals later this week, definitely keep an eye on German CPI on Friday. That's a big one. This pullback zone right there, I would be looking at the 38%. Or maybe down in the golden zone, but probably 38% is plenty aggressive for me. You're printing 24, somewhere right around 24,046, 23,869, somewhere in that zone. Could be very good. Let's go down to the monthly and take a look at our broader look. All right, this is easy. I see a chart like this. It's easy. There was your big catastrophe, the tariff panic of 2025. I'm sure they're going to write books about it. Everybody's going to be an expert on tariffs. Believe me, after this Trump administration is finished, everybody's going to have an opinion on tariffs one way or the other, whether they work or whether they don't. Who knows? What I do know is this spike low here, spike high there, and that is pretty much your money. That's your money area. 13-month EMA is down there at 22,663. 38% is right there at 22,370. Remember, this is a CFD product. Your CFD pricing is going to be a little bit different, just depending on your broker, but that's what the market dynamics should look like. Spike low, tariff panic, double top up there. Got an opportunity down there at the 13-month EMA, and then you've got really just a beautiful scenario setting up for downside support. So I'm interested in that zone. I think it's a pretty good one, but absolutely nothing has happened here since June. June, July, August, September, October, November, December. I mean, that is just absolutely a ruthless consolidation pattern. That's brutal. I mean, that's one of those where we could take away, our technical analysis and just really look at it running a rectangle formation. I mean, it really is a rectangle. Spike high, spike low, resistance, support. Do we stay inside the rectangle or do we break? It's going to take something to break out. Probably not going to break out this year. So we're definitely watching the DAX, but probably don't need to be watching it every day. That's for sure. Let me see, SGK, do you think the 7.6 earthquake in Japan today will have a long-lasting effect on the yen? It's an interesting question, and what everybody's watching right now, and actually we could get a real quick update, is the tidal waves. You're looking for a Fukushima type of event. You're looking for nuclear reactors going offline. You're looking for power outages, damages to infrastructure. Does There it is right there. 3 hours ago, Japan issues a tsunami warning. So you're going to want to be watching for the tsunami. Well, I'm not paying for the New York Times. Japan issues a tsunami warning after a 7.6 earthquake magnitude strikes near Japan, rocks the coast off of northern Japan. Tsunami warning issued. 47 minutes. Here's the deal. If the damage is bad enough, and you see the tsunami hit, and you see that infrastructure get really crippled across the country, in order to get that back online, the BOJ definitely could be rushed into rate cuts. They may rush into emergency loans. They may be rushed into an emergency type of a situation. We know that the emergency is all about rate cuts. But take a look at what's happening to your yen right now. Not much. So your monthly, you sort of have a little hammer setting up down about 0.25%, 38% down there at 153.20, somewhere down in there. These would be the levels I would be watching. But would the yen strengthen or weaken given this? If the tsunami hits and if there is severe damage to Japanese infrastructure, then you're going to have to see a relaxed monetary policy. It takes money to fix these things. And the Bank of Japan will spring into action. Think COVID. Think of what the central bankers did during COVID. Pump the system full of money. In this case, it'll be full of yen in an attempt to rebuild. There probably will be aid packages coming in from the Western nations, other G7, G10s. That's almost a given. But it really depends on how big the damage is going to be. At this point, we're not really seeing the action. A little bit of a rally, of about 0.25%. The jury is still very much out on this event, but it's a good observation, SGK. Will it have a long-lasting effect? It definitely could. It definitely could. It just depends on the fallout and the damage. We're looking at infrastructure. We're looking at major public works things that have to be rectified in short order. All that takes money. It will devalue the yen almost assuredly. Stay tuned. We have to see a damage report. We have to get an exact sort of an idea of what's happening on the ground and the impact of this event. And it's a big one. We've seen earthquakes in Japan, royal markets, especially the Nikkei, especially the yen. We saw that during the Fukushima meltdown. That was already quite a while ago. There was also another major earthquake back in the 90s that really hurt the entire Asia-Pacific region. I can't really remember when. It was in the early 90s. It's going way back. But it was sort of the basis for that movie Rogue Trader with Ewan McGregor, where the rogue trader Nick Leeson, he's actually still around, but Nick Leeson got exposed with some futures contracts, and they had a big earthquake, and the markets just melted down. And so, yes, it's a great observation, SGK. You've got to pay attention to this stuff. You have to. And the thing about earthquakes or volcanoes or tidal waves or any of it, it's unpredictable. We have geologists and people on the ground that think they know what's up, and it's just unpredictable. It really is. So you do the best you can with events like that. That's for sure. One more reason to have stop losses. Okay, well, let's go ahead and get over to our MT5 platform here. I have to apologize ahead of time for my voice. I'm already starting to crack up a little bit. Ahmed, Shane, I feel confused between the Euro news, CPI, and news for each country while their effect on the Euro. I'm not really looking for much out of the Euro this week, Ahmed. We'll pull a Euro USD chart in a second. The biggest thing you need to focus on this week is going to be the Fed meeting, and that's on Wednesday. Here's some key levels for your gold market and your silver market. What I want to point out here is silver is definitely far more bullish than gold right now. It's bringing in the gold-silver ratio, and it's happening fast. This spike low right here to this spike high, here's a pullback, 38%. We'll pull this on TradingView in a second, but this is what we're looking for. Still bullish gold, still bullish silver. Just look at this. Look at this breakout. Look at this move of silver compared to the move in gold. Two things to remember. Number one, gold has an all-time high already established right up there at about 43.50, somewhere in that zone. Silver, much, much closer. We just made an all-time high last week, and you're really looking to explode north from here. Far more bullish silver than gold right now. You just have to be smart about what you do, and if you bought in back here in October, somewhere around 40 or 35, and you've pretty much doubled your money or taken a 50% gain, you got to decide what you want to do. You have to decide what you want to do. That's for sure. All right. As far as what we can be looking at from a more technical aspect, here's your daily chart on silver. You can see we really made that all-time high back on the 5th of December, coming back down maybe 55 and a quarter. That's a pretty strong bid. So if you get an opportunity to buy that pullback, I probably would not hesitate. Matter of fact, I know I wouldn't hesitate. You've also got the 13-day EMA right there at 55.44. That is a rock solid. That is a rock solid support zone, one that we will certainly be looking at as the week progresses. No question about it. As far as what we can be looking at with regards to gold, much the same, just not quite as defined. If you wanted to do something on the daily, could you go long right now? You could. You're right around that moving average. 13-day EMA is down there at 41.75. Is it good? Is it bad? It's really flat. It's much more choppy, much choppier than the silver market, that's for sure. Right there, Fibonacci retracement, spike low, spike high, 41.25. That's robust support. I would be watching that closely, very, very closely as we roll deeper into this week. That might be a great bid setting up for Fed Day. So you definitely want to keep an eye on that for gold and silver. We got a couple other stories to cover here, and then we'll go ahead and sign off. I think we've got an interesting week ahead of us, one that I am fascinated with. I think it could be a good one, but it may in fact just be the last real week of trading for our trading year. A couple of things, though, that I do want to point out, and one is with regard to the U.S. oil market. We've been watching Venezuela like a hawk. I'm almost tired of talking about it because we don't know if anything's going to happen now. Maybe you see crude oil, settle into its bearish pattern. I'm going to pull a U.S. oil chart. We absolutely nailed the entry point to the short on this thing. We nailed it to the top side resistance area on the weekly. You can see it right here. This is it. People went into the weekend. People went into the weekend clearly believing that we may get a Venezuela strike, me included. So what would you do with U.S. oil going into a weekend if you believed that you were going to get a strike? You would buy it and you would hold it. Well, a lot of folks did that. Today, you didn't get the strike, and the sell is on, and we're coming off in a big, big way, about 2.25%. This market is heavy. I fully expect to run at yearly lows. I've been saying that forever, but you can see exactly how many sellers are in the market. That's a major plunge today. We have the 60-50 area outlined. Absolutely beautiful. Spike high to a spike low. We pulled back Friday, hit it perfect. Absolutely hit it perfect. Let's take this down to a 30-minute chart. You can see exactly what happened right there. About 8:30 a.m. My time, 10:30 a.m. Eastern. We went right up to a high of what? 60.50. And the sellers stepped in and just destroyed this market to the downside. You're now off about $1.30. About $2, $1.80 from that area. That was robust topside resistance. If you got that trade, my compliments to the chef. Well done. Now, it all depends on what happens in Venezuela and what happens in Maduro. We just don't know. You can see military engagement odds, about a 53% chance by March 31st, about a 25% chance we get one this year. Maduro out by when? They're thinking that Maduro might hold on here for a few months. So this is sort of what we're watching. 35% says he's out by March 31st. It's tough. It's really tough to really predict when these folks are going to step away. There could be a deal struck. Trump could talk to him again. We just don't know. Removal by force is a definite possibility. And it's one of those things that we've got to be looking for. Be careful. Be careful with this. Anything can happen here. Nobody really knows. We all expect some sort of action against Venezuela. Just don't know if it's going to be this calendar year. That's for sure. Okay, we have a question. Bobby Bob for the US 30. And then let's see. Ahmed. Shane, I feel confused about the Euro news, CPI, and news for each country while their effect on the Euro. The biggest thing to remember about CPI is you're looking for Eurozone CPI for the Euro. So your Eurozone CPI, you're looking for a high CPI is going to be a strong signal for the Euro. That suggests tighter policies needed from the ECB, the European Central Bank. And a low CPI is going to be sort of a little bit bearish for the Euro. It means that, okay, they may cut interest rates or hold them where they're at. So that's relatively straightforward. Just focus on the EU CPI numbers. They release them a lot more often than you get them out of the United States. So just be aware that they don't have quite the impact that the U.S. CPI does, but they can still set you up to recognize a trend in consumer pricing in the Eurozone. Let me see. How to approach all this while trying to shape it to help our trading for the Euro. Well, the biggest day for the Euro is going to be Wednesday, the Euro-US dollar. That's when the Fed speaks. That'll send the dollar directional. So be ready for that. So if you trade the Euro USD, be ready for that. We'll probably put that in our picks of the week for this week's Switch Markets newsletter. Check it out there. A video on Switch Markets at YouTube. You can check out the video there as well. But as far as, how would I be trading the euro right now? Well, I mean, it's been really slow, to tell you the truth, Ahmed. It's been really a slow market. And when I start seeing dojis show up, and we sort of had a point of control, a big-time volume area there, but we're seeing dojis. And when you start seeing dojis show up, it means that nobody really knows what to do with it. That's not uncommon for the Euro USD on a Fed week. So right there, you can see we went right to 50%, which looks to be a pretty strong level for the Euro US dollar because it's a rotational market. So something right down there, you got, a 13-day EMA, 116. I think 116 is a huge level. So for me, this is easy. This is an easy read. The back end of our golden zone plus that 116 zone. We've got 116.12 as your EMA. This area right here is robust downside support for the Euro USD, no question. That's what I would be watching. If you get a sell-off down there in the next 24 hours, it could be a pretty good little trade to the top side. Just be ready for Wednesday. Wednesday's big. Let me see, SGK, so much for Trump being a president of peace. Well, I mean, that's about the truth. That's one of the biggest criticisms right now is the bombing of Iran. Definitely has drawn a lot of criticism. And then looking at starting something up with Venezuela. There's a lot of good reasons to do it. I mean, there really are. You can talk fentanyl. You can talk drugs. You could talk, potentially election tampering. You could talk about money laundering, just your energy trade, Venezuela being allied with folks out of the East. You could definitely make all those arguments. Is regime change the answer? I'm going to save that for people that are a lot smarter than me. It never really goes according to plan, and it typically always turns into a mess. So I always say be careful with regime change. More often, more times than not, you run into it's just a ball of yarn. You pull, or a sweater, you pull a string here, and you get a knot over there. You fix this knot, then you get another knot over here. I mean, it always. The thing about regime change is it always creates a vacuum, and then whatever fills that vacuum, you're stuck dealing with because you don't really want to go in and change another regime over. So I don't know anything about it. I know how it impacts the markets, and right now it is one of the only things holding crude oil above $55 is Venezuela and rate cuts. That's it. That's it. Other than that, we're looking at $50 crude, $45 crude oil. All right, let's go to US 30, and this will be our final market of the day. I'm bullish. I mean, this is one of those things that I am fully. We looked at the dollar CAD loser earlier today. Coming into 2025, this is 2025, isn't it? Yeah. Coming into this year, I said, okay, what's likely to happen? We knew there was going to be problems. We knew there was going to be problems with tariffs. We knew there was going to be a shakeup as the Trump administration came in and starting renegotiating every trade deal under the sun and putting tariffs on people and just doing things in a different fashion. All right, it's not necessarily that I don't like the policies. It has nothing to do with any of it. What has to do is change and uncertainty. And what happened? We did have a semi-market crash in April. We came off, about 3% for the month, but from the beginning of the year, we were up around 45,000 there in the Dow, and we traded all the way down to about 36,000. That's a big-time move, all right? That's more than 10%. That's officially a correction in about 90 days. Now, my big prediction for this last year was a market crash, and I'd say I got it about half right. I personally was looking to see these markets trade down in here somewhere. I was looking for 34s. I was looking for a major crash to knock all the retail longs out before you saw this thing really build back over the coming 36 months. It didn't develop. You had a major liquidation here. A lot of panic came into the market in early April. A lot of hedge funds were selling. Cats living with dogs, hysteria, right? But since then, we've been just on a rocket ship north, and you've got a winning streak of, 6-7 months. So you want to buy any chance you get. In my opinion, you just want to buy pullbacks. There's no reason to reinvent the wheel. Spike low there, spike high there. A pullback right down around 46.5 is a good one. Now you're about 1,000 points above that. Do you get that opportunity? Maybe. You might get it maybe after the Fed speaks, if they surprise the markets and hold rates firm where they're at, and maybe they're a little more hawkish than we thought. Maybe. Potentially we could get that level. Do I think we're going to get it? No. No, I don't. But if we do get it, 46.45, maybe potentially we get that bid in an area where we can really sink our teeth into this market. Now, as far as what we can look at for the next couple of days on like a shorter time frame, do I want to be long or short this week? I'm not committing either way until after Wednesday. I want to see what the Fed says. I want to see what Jay Powell says. I want to see how bad they send the market south or if they send them north. This is a bearish open to the trading week. I don't expect it to last. If you wanted to scalp the US 30 this week, 47.5, 47.553, maybe 47.60, 47.7, a 575, that could be a really strong scalp down in there. Back into the golden zone, pretty good little area. So I would be looking very closely at that. I think that could be just a hell of a trade. But you have to be very careful with this stuff, Bobby. If you're going to get in there and make some moves on the US 30, you've got to remember the Fed will dictate everything this week. They could cause a major sell-off towards our macro level, which I love more. But if you wanted to scalp this thing, you could scalp it. You could do it. You could scalp it. So, 47.550, somewhere in that area is pretty good stuff. Pretty good stuff. Let me see, SGK. I shorted the Euro Japanese yen at 181.4 and wonder if I should have held on to it today. Expecting it to weaken against the yen with the incoming rate hike. Yeah, but the earthquake. I mean, you sort of got, to me, the earthquake, if it was going to really shake the yen up, it would have already done it, right? I mean, those tsunami warnings were out 3 and 4 hours ago. We probably have a pretty good idea if there's going to be a wave at this point. As far as this is just a really tough market. So if you look to sell, let's see, you stepped up and shorted 181.4s. Yeah, that's great trade. It's not great trade location, but it's pretty damn good. 181.4, somewhere right in that area. I mean, I could see what you did, right? Played off of last week's high. It looks like 181.46, little sell. Well, I mean, here's the thing, and this right here is a textbook type of a situation. But it's a bullish read. There's your spike low. That's sort of your trend. Pullback area, still very bullish, but tough, sort of a tough environment that you've really seen rotation since the 24th of November. So this is sort of that rectangle that we were talking about earlier. Rectangle's what? You've traded inside of the 21st of November's range for what, the past 3 weeks. So if you're holding shorts, it's sort of a nice reversion play off of last month's high. You just have to be very careful that you don't get a break and maybe a run and a test up here. I would be playing rotational flat strategies, reversion to the mean strategies here on this pair, just because it is flat and there's not much going on there. So definitely want to be interested there. I think that could be a pretty darn good trade towards the top of that. Maybe play a pendulum, maybe play a nice reversion strategy looking to sell, right up there towards 181.26, maybe selling 181s. Could be pretty good. All right, guys, we were going to talk a little bit about AI today, but I've already run long. I'm just going to briefly touch on this news. This is big stuff right here. Trump says AI executive order limits state rules is coming this week. Trump to issue order creating a national AI rule. Consolidation of AI. Does it hurt AI or help AI? It's what we always say. There's winners and there's losers. And an executive order that protects any facet of the artificial intelligence industry is going to help some and it's going to hurt others. Who's likely to benefit? Well, you got to think that any AI regulations are going to probably benefit the major players in that space. NVIDIA is probably one that you're looking at today. You're up about 2.5%, or 1.8%. A lot of it's on that announcement. We'll see if they rectify this executive order this week if it's signed. But you're watching things like NVIDIA. You're watching things like Palantir. You're watching your chip makers and your data providers. You're also going to have to watch the heavyweights. Remember, Meta is looking to position themselves as a major player in the AI space. So something like this, interesting stuff. Amazon has already sort of dove into that arena. We're talking about data centers, talking about power plants, nuclear energy. Interesting stuff. We had these gaps outlined a long time ago, back on the 31st of October. You can see exactly what happened. You had a gap area there and a gap area there. You sold off. You filled in that gap. You traded that. You came right down and hit that gap perfect. Filled it in, bounced up, and since then traded back down and beneath it. Now that gap's sort of topside resistance. Amazon's an interesting one. It's an interesting one. What do you do, essentially? Do you see the current sell-off as being extremely bearish, or do you want to get a piece of this stock? It's tough. with something like an Amazon, I mean, we just saw what happened to those gaps. Sometimes if you're looking for investment ideas, you do it in terms of years, not days, not weeks, not months. You'll notice it's just sort of a big doji this year. Interesting. 191s, maybe looking to buy 200s, invest at 200s. It's hard to argue with that. You may get a deeper pullback here though before the train heads north. So I'm interested. I'm probably interested in 195s, 200s. Could we get it? Yeah, we could get it. The AI thing right now is everything. It's dictating policy on everything. All right, guys, I didn't get out to Bitcoin or the cryptocurrencies, but fairly bullish. Bitcoin's flat at 90. Really a nice rally, topside rally. Ethereum's up about 2%, establishing itself back above 3,000. Dogecoin's up about 2.75, right around 14. And then Shiba Inu's right around 8.5. Interesting stuff. Pretty bullish on the altcoins today. Bitcoin's flat. The AI rule will impact Bitcoin. It will impact crypto. There's no doubt about it. All right, everybody, I'm going to go ahead and sign off for right this minute. Tomorrow, we're back at the same time. Remember, we've got an unconventional streaming setup for this week. RBA interest rate decision. We're going to cover that. Jolt's Jobs, if it's released. Wednesday's FOMC Live. Be sure to tune in for that FOMC Live meeting. We'll give you the keys. We'll break it all down. We'll listen to Jay Powell and what he has to say. And then Thursday is the Switch Markets live trading webinar, only on Switch Markets on YouTube or in the How to Trade trading room. And we're going to do some more tick scalping. I had fun the last time out. We didn't have much of a problem making our 9 ticks. This time we're going to shoot for 10 ticks and see if we can stack 10 ticks in about 30 minutes. 20 minutes of trading. So it's going to be some high-impact scalping. I'm going to show you tick scalping live. We got really a lot of folks that really enjoyed that last stream, so I figured we'd do it again for this week. All right, everybody, I'm going to go ahead and sign off. If you have any questions at all, be sure to tune in, send me a private message over at howtotrade.com. You just go in, join for free, go in, click on my picture, send me a message. I'll be sure to get back to you. If you don't want to do that, just always be sure to weigh in on the live chats. I love to hear from you. If you have any questions at all, bring them tomorrow. Remember, aside from Wednesday, we could be in for some slow trading conditions. I think that we're in for a pretty good trading week. Now is probably not the time to be risking your car or your house, but it's a good time to evaluate where you're at as a trader, what you want to get accomplished next year, and also maybe try to make a few good trades before these markets go absolutely dead, which I think is probably coming. We're down to our last sessions of the year, guys. I think you're going to see things really start to die off after the Fed meets. We'll look at probably an active session Thursday. Friday could be pretty good. And then we'll be looking at Monday, Tuesday, Wednesday, the next week, Thursday. Those will be big because we'll have NFP released the 16th, and then we'll have CPI released the 18th. That'll be a big week. But after that, so we're down to probably about our last 8 sessions of the year, I would say. It's the way it is. And then we come out guns blazing in January. All right, everybody, have a fantastic trading day. Trade the action well, and we'll talk soon. See you.